Hello, and welcome to this episode of Investing Not Rocket Science. We've been through 6 episodes, and in today's episode, we're going to look at what my portfolio looks like at the end of these 6 episodes. In episode 1, I defined a basic investment portfolio framework. The value of the investment is $1 million. I'm looking to invest into equities and bonds, and I intend to actively manage this portfolio without the use of leverage. I have a time horizon greater than 5 years, and I'm looking to invest into the developed and emerging markets. From episodes 2 to 5, I shortlisted Google, Emerson, and Infineon as the first three stock additions to my investment portfolio. And in episode 6, I looked at adding on uh, gilts, government issued bonds from UK with a time horizon between 1 to 3 years. This video is the first portfolio update. Okay, let's see what this portfolio looks like. Now, all of these values are in GBP. That is because the base currency of this portfolio is in British pounds. Okay, so the portfolio is up 1.36% between 14th of February to the end of last week, which is 24th of February. So it's up 1.36%, while my portfolio benchmark, which is the ACWI index, is down 3.92%. All right, there is outperformance on the investment portfolio vis-a-vis the index, and I could say there are primarily two reasons for this. One, uh, though the base currency is in GBP, most of the cash component that I have in this portfolio is in US dollars. And as the dollar index has risen, the value obviously of my portfolio has also that has added a positive performance to the portfolio. So it's more of a currency related performance in one aspect of it. And the second is while I did pick up stocks to add to this portfolio, most of these stocks were added on last week. So it's more about the timing of buying these stocks that have also uh, worked on a reduced negative impact on the portfolio. Now, while I would just say that this is beginner's luck, to be to put it across very simply, it's just been 10 days, and 1.36% is purely just business. I mean, it's just beginner's luck. Some period luck generally tends to fade away, and what really matters is skills, and that is really what will generate or create a positive impact to the portfolio. All right, so moving along, let's look at the asset classes. As you can see, I've got equities worth about 123,000 pounds. I've got fixed income worth about 298,000 pounds, and cash worth about 427,000 pounds. All right. So, in terms of a portfolio perspective, I've got more than half or about half of this portfolio in cash. I've got about 30 odd percent in fixed income, and about 15% of this portfolio in um, equities, right, which is split between Emerson, Google, and Infineon. They all have the similar weightage, approximately 5% of this portfolio. So I've got about 35%, in fact, 35% of my portfolio in fixed income, which is the UK gilts, and the remaining, which is almost half, in still in cash, which I need to deploy. Okay, and you can see the portfolio performance there as well on each of these asset classes. So largely flat for equities and fixed income, and most of the performance has come in from the cash component, which is exactly what I was talking about. This is largely due to the fact that the dollar is appreciated against other currencies, and that's what's added to this improved portfolio performance. All right. In terms of the non-cash instruments, we've got four of these additions to this investment portfolio in the last six episodes. So you got Google there, 550 stocks, and you can see Emerson and Infineon at about 1,400 stocks at an average price of 34.89. Infineon has in fact taken a lot of punishment in the last couple of weeks. It looks like 3.4% down. Emerson and Google's performances have pretty much cancelled each other out. The Gilt from UK, these were just picked up on Friday. Okay, so that's the first portfolio update. To summarize, the portfolio is up 1.3%, while the benchmark is down 3.9%. So that's pretty good beginner's luck. Now, in the next video, I am looking to add automotive stocks to this portfolio. So that's what I'm going to evaluate. And I look forward to seeing you in the next video. This is Investing, Not Rocket Science, a series on building and managing an investment portfolio. None of this is expert advice. I'm just learning alongside you. Please visit our website for the terms and disclaimers, and we can connect on LinkedIn. Thank you for watching, and see you in the next video.